Have you ever looked at the stock market and just thought, this makes absolutely no sense? I mean, right now, the S&P 500 is flirting with all-time highs, but it feels like every investor you talk to is bracing for a crash. So what is going on? Well, we're about to pull back the curtain on a hidden signal in the market, a signal that pretty much changes everything.
And just to see what I mean, look at how negative the mood is out there. A recent survey shows that the bears, the folks betting the market is going to fall, outnumbered the bulls by almost 10 full percentage points. That is a huge gap, and it just screams widespread fear.
And this, right here, is the central puzzle we're going to crack open today. If everyone is so convinced that the sky is falling, why is the market on the verge of making a new record? Something just doesn't add up, and we're going to find out exactly what it is.
So, here's our game plan. We'll start with this confusing market, break down the official story everyone was told, and then expose the real culprit. After that, we'll look at the Fed's huge move, explore a contrarian opportunity, and finally, stack up all that negative sentiment against what's actually happening in reality.
Okay, first up, the official story. Now, to really get the bigger picture here, we've got to look at something that happened recently that seemed to prove all the bears right, that sudden sharp crash in Bitcoin's price. And of course, the mainstream media had a very simple, neat little story to explain it all away.
The story you probably heard went something like this. The Bank of Japan hinted it might raise interest rates. That would make the Japanese yen stronger, and for some reason, that spooked the crypto markets and caused this massive sell-off. I mean, it sounds plausible enough on the surface, right?
Yeah, well, not really. The drop was way too big, way too fast to be caused by a tiny ripple in a foreign currency. This story was a convenient smokescreen, a distraction from something much, much bigger that was going on behind the scenes.
And that brings us to the real culprit, liquidity. This is the hidden force, the invisible hand that is truly moving the market. And it doesn't just explain Bitcoin's drop, it explains the entire puzzle we started with. So what even is liquidity? Just think of it like the fuel for the financial system's engine. It's all the cash and easy-to-access money that's available to be invested. And when there's less fuel, there's just less money to buy things like stocks and crypto. The engine sputters, prices fall. And an asset like Bitcoin, it is incredibly sensitive to this fuel level. And the scale of what's been happening is just staggering. Since 2022, the U.S. Federal Reserve has been actively sucking liquidity out of the system. We're talking about removing $3 trillion. That is a mind-boggling amount of fuel to just take out of the engine.
But wait, there's more! It didn't stop there. On top of what the Fed was doing, the U.S. Treasury yanked another $600 billion out of the system just since mid-July. This 1-2 punch put this immense, almost unbearable pressure on everything.
So here's the bottom line. All that money being drained away pushed bank reserves, the cash that banks have to keep on hand, down to dangerously low levels. The whole system was basically running on fumes. That is the real reason Bitcoin fell. It wasn't reacting to news from Japan. It was suffocating from a lack of cash.
And this is where the story takes a huge dramatic turn. Because when the Fed saw the system was on the brink, they kind of panicked. And they made a big move, one that signals a massive reversal in their policy.
The Fed saw all the warning lights flashing red. They realized that the liquidity crisis they created was about to cause a serious breakdown. So they stepped in, and they did it in a way we have not seen since the great financial crisis back in 2008.
What did they do? They pumped $13.5 billion back into the system. And get this, they did it in a single day. To give you some context, that was the largest one-day liquidity injection in over a decade. This wasn't a routine adjustment. This was an emergency fire hose.
Now, this single action is a total game changer. It signals 4 incredibly important things. 1, the Fed is basically admitting there's a serious problem. 2, they've shown they are ready and willing to print cash to save the system. 3, this probably means the worst of the liquidity crisis is now behind us. And 4, that massive headwind that was slamming assets down has suddenly flipped and turned into a powerful tailwind.
So, how does this create an opportunity for those of us who are paying attention? Let's look at the contrarian bet that this new reality sets up, and let's get specific.
Okay, let's take a company like MicroStrategy. It's been swamped with negative rumors lately. You hear things like, oh, they're running out of cash, but the reality, they have enough liquidity to operate for more than 20 months. You hear, the price drop is because the company is broken, but really, it's just a leveraged reaction to Bitcoin's liquidity-driven drop. But the most telling sign? The trading volume on the day of the crash was insane. It was a textbook capitulation event. That's when all the scared sellers finally throw in the towel, which ironically often marks the bottom. So for Bitcoin itself, this liquidity shift really maps out a clear path forward. Step 1 was just bottoming out, absorbing all that fear from the liquidity crunch. Now step 2, it can build a stable base and consolidate. And from there, step 3 is the next leg up. With that fuel returning to the system, the path to new highs is suddenly wide open again.
And this brings us right back to where we started, full circle. This whole situation perfectly illustrates the huge, gaping disconnect between sentiment and reality. And it's a powerful reminder to watch what people do with their money, not what they say in surveys.
And this disconnect, it is just wild. On one hand, you've got consumer surveys where people are saying they feel terrible about their financial future. But on the other hand, what are they actually doing? They're spending like crazy. Black Friday sales just jumped over 9% from last year. So what gives? Why the disconnect? Well, it's actually pretty simple. Those surveys, they capture the very real pain of lower-income families. But the bulk of actual spending, the thing that drives the economy, is done by high-income earners. And that group, they're still spending and spending big. The economic engine is just a lot healthier than the gloomy headlines want you to believe.
So let's put all the pieces together. You take a surprisingly strong consumer, you add a Federal Reserve that has just pivoted from sucking money out to pumping it in and is probably going to start cutting interest rates soon, and what do you get? You get an incredibly powerful tailwind for the stock market.
And here it is, all laid out. The bullish case is built on 4 pillars: a strong consumer, a Fed that's now adding fuel to the fire, the strong possibility of rate cuts, and, ironically, all that extreme bearishness, which, from a contrarian view, is a classic buy signal. All the key factors are now pointing in the same direction, up. Which leaves us with one final, crucial question. In a market that is constantly driven by fear-based stories and scary headlines, what's the bigger risk for you as an investor? Is it listening to the scared and pessimistic crowd, or is it listening to the unmistakable flow of liquidity? Because right now, those two things are telling you 2 completely different stories.